99% of people see red candles right now and cry that crypto is dying. The 1% sees the biggest sale of the decade and calmly executes the plan. Are you afraid of the crash, or are you afraid of being left behind with the rest of the poor? In this video, I will show you why Bitcoin is the mathematical foundation of wealth and how to read charts so you stop being exit liquidity for sharks. This content is for educational and entertainment purposes only. I am not a financial advisor. Investing in cryptocurrencies involves risk. Do your own research before making any financial decisions. Why is now the time for Bitcoin? Do you see red candles on the chart and headlines about the end of crypto? The best moment to get interested in Bitcoin is exactly when the majority is sick of it and extreme fear dominates. Do you prefer buying in euphoria at the top, or now when everyone is predicting the end? Drops are not a time for emotions, but for preparation for the next bull market. Big wallets buy exactly when the crowd is panicking. Before we move to the indicators, let's remind ourselves what we are investing in. Bitcoin is blockchain technology, a massive decentralized transaction ledger that no bank controls. Thanks to on-chain data, large investor purchases cannot be hidden like on the traditional stock exchange. Unlike centralized databases of banks or brokerage houses, the blockchain is a public distributed register. Every transaction is recorded forever and anyone can see it. The crypto market is cyclical and driven by crowd psychology. History shows that the bull phase usually lasts around 1060 days and the bear market from 350 to 380 days. Despite theories about a supercycle, the current bear market follows the calendar. The peak occurred on October 6th last year, and the bottom may fall around October this year. A breakthrough, however, was January 10th, 2024, when spot ETFs were approved in the USA. This opened the door for massive institutional capital in giants like BlackRock, which was buying at the bottom in 2022 while officially calling crypto a pyramid at the time. Thanks to ETFs, Bitcoin becomes more credible, although it may mean lower volatility and stronger correlation with the traditional market. Thanks to the blockchain, we have full transparency and can see what the whales are doing. Here is what the data says. Fear and Greed Index. We are currently at 8,100, extreme fear, which historically has been the best buying opportunity. MVRV Z-score. This oscillator shows market undervaluation. It is currently very low, close to the green zone that rarely appears and signals accumulation. Realized price, average purchase price. The blue band oscillates around $54,612. Historically, the final bear market bottom occurred about 20% below this level. A few more indicators that historically captured Bitcoin bottoms well. The stock-to-flow model based on supply scarcity shows how hard an asset Bitcoin becomes after each halving. When price is below the model band, historically it meant undervaluation and accumulation zones for the patient. The second is the Bitcoin versus gold ratio, an indicator showing when capital starts flowing from gold to Bitcoin. The moment Bitcoin regains strength against gold often preceded new growth cycles. Another thing is the weekly EMA 200, one of the strongest long-term support levels. In previous bear markets, the price dropped to its area or slightly below before starting a multi-year bull market. Value days destroyed, VDD, multiple. This indicator analyzes when old, long, inactive Bitcoins start moving. Net unrealized profit or loss. This indicator shows whether the market is mostly in profit or in loss. Optionally, you can also observe the Puell multiple, a minor profitability indicator. When it falls into green zones, it signals minor capitulation and historically coincided with the end of bear markets. Investor behavior. Short-term investors often buy at the top and sell at a loss. Recently, they sent as much as 95,000 BTC to exchanges. Meanwhile, long-term investors, holding 14.5 million BTC, patiently hold their assets. Stablecoin outflows. Since January 1st, capital in stablecoins has clearly been flowing out of the market, confirming the current crypto winter. CBI Index. The composite sentiment indicator is at 36,100, a zone where it is more profitable to buy than to sell. Strategies that always worked. Capital management. Invest only what you can afford to lose. Cryptocurrencies should not make up 80% of your portfolio. Avoid the casino. Stick to top assets. Avoid meme coins that can drop 90% in minutes. The winning strategy for Bitcoin has always been buy at the end of the mid-cycle year, sell in the fourth quarter after the halving. Bitcoin has died 461 times. If you had invested $100 at each of its funerals, today you would have millions. The market is brutal and volatile, but it rewards the patient. Summary. Actionable steps. Educate yourself before you invest. Analyze on-chain data and movements of large wallets. Use indicators. Build your own accumulation strategy. Invest only capital you can afford to lose. Leave a subscription. Like and comment what materials you want to see next and whether you have any questions.